Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, November 21st, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts, I'm going to start with the big picture as usual, work our way into the day itself. Just to back up, about a month and a half ago or so, we settled below this 10-month channel bottom that is presently in the low 260s, 263.62. At the time, anticipating this 4 or 5-month descending channel bottom that is presently at 176.82. We are anticipating that 176.82 level up until the point we settled above this descending 1/3 speed line, which came into existence once this low was put out in late October. It held nicely for a week or so, and then we closed above it a little over a week ago. That set off a 3 to 5 week buy signal into, well, you kind of take your pick between 263.62 and 267.73. 267.73 is this descending channel top on the daily chart. So this is really the range of resistance that we're still anticipating as a 3 to 5 week target above 214.69. We're a full week and a couple of days into that buy signal, and we've been in this sort of kind of two-sided framework. We topped out on the way up at the 50% retracement level. 246.68 is halfway back up from the July high against the more recent late October low, and fell away, not substantially, and here we are. In fact, this is a good chart to start with the day itself. Still, 236.62 is a 3/8 upside Fibonacci. That looks more like a 50%. I think that's probably what it is. I'm just visualizing that right now. Whatever it is, it's either a 3/8 or a 50%. It's performed pretty well over the last couple of days in containing intraday buying pressures or daily buying pressures. We did push through it again, but very modestly on Monday. If we push through 236.62, you should allow 246.68 intraday, where we can top out, double top, if you will, for the day itself, possibly in a later week. I am, though, keep in mind, anticipating longer term, and what I mean by that, over the next few weeks, over the next 3 to 5 weeks, this 267.73 channel top. So if we close today above 268.68, I see no good reason to be short this market if your time horizon is 3 to 5 days out to 1 to 2 weeks, because I think over that time horizon, we should reach our 3 to 5 week objective at 267.73, where we can top out through the rest of the year and into January, and that pretty much covers the upside. Now for the downside, just know that holding below 236.62 does allow the market to ease back to this 3/8 downside Fibonacci, which actually held Friday's low. That's a 3/8 downside Fibonacci from the late October low to the more recent high of last week. 226.60 in reach today, holding below 236.62. 226.60 able to contain session weakness. And if we close today below 226.60, we can test this meaningful range of support between 214.69, that long-term speed line, and 218.40, a new rising 2/3 speed line that can absorb selling pressures for the week through all of next week. We could come off of this area nicely and 3 to 5 weeks later be reaching back into the upper 360. So the only scenario in which I expect to see this lower area is if we break or close below 226.60. Until then, this is actually a decent base of support. Session containment, able to contain session weakness, and above which 246.68 remains in reach this week. We could trade inside this range through the rest of the week. And the indication for whether we actually reach 246.68 sooner than later would be a push or open today above 236.62, which I think will place 246.68 in reach as a day target. Once more, we are ultimately anticipating a settlement above 246.68. I'm going to say over the next week or two at the most. This allows the market to fall back into this zone of support perhaps over the next 3 to 5 days. I'm not expecting it once again unless we violate 226.60, but this area could hold over the next few days, 3 to 5 days, and from there we could round back up to 246.68 within a week or two of doing so. But closing above 246.68, I don't think we're going to see this area anytime soon. And in fact, it does pivot the market north through the rest of the week and into next 267.73, then considered a 1 to 2 week target. So if you're an options trader, for instance, and we close above 246.68, you may reach for 265 or 268 out of the money calls that don't expire for at least a couple of weeks. In terms of other option plays, I don't see a good one unless we push into this zone of resistance in the low to mid to upper 260s. Then you can reach for lower put prices, 210s, so forth. I'll be apprising you that, of course, as we go day to day on the Tesla report. If we push into this zone of resistance over the next week or two, I'll definitely be pointing out what I think the realistic downward objectives may be. And at this point in time, and it might not be true then, but at this point in time, it really is more in the 210s. So if we were today to test, for instance, 262 or 267, I'd be suggesting, say, a 210 or a 205 out of the money put that wouldn't expire for at least a couple of months, but we're nowhere near there. In terms of the downside, if we happen to slip into this zone of support between 214.69 and 218.04 over the next few days, and once again it becomes indicated with a violation of 226.60, then if we're testing 214.69 and 218.04, you may then reach for below the 260s or 265 out of the money calls that don't expire for at least a couple of months. It's not going to take that long, but I don't want to suggest a few weeks only to watch the market rally to your strike price, to watch it decay to nothing as it approaches its expiration. And finally, and it's not going to happen today, but if over the next week or two we settle below 214.69, then we're once again back to anticipating this long-term channel bottom at 179.67 within 3 to 5 weeks of that. So yes, if we close below 214.69 over the next few days, let's say, and I'm not expecting it, but if we do, then I think you can reach for the 175 or 180 out of the money puts that don't expire for at least a month, because that would be the anticipated objective if we were to close below 214.69. Until then, this is bottom picking territory really into December, and above which, once again, we're expecting this band of resistance between 262.12 and 267.73, where we can top out on a monthly, possibly quarterly basis. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial, no strings attached, other than entering your credit card information. You're likely going to enjoy what you receive, and you'll probably stick around for a while, maybe a long while. But if not, no harm, no foul. You'll at least get some really great analysis for 5 days. So check out wickedstocks.com. I'll be back tomorrow with Wednesday's Tesla. You have a great day.